Key indices at day's low. Nifty and sensex erased most of the gains for 2022. Nifty bank sheds over 1,000 points. Financials, autos and utilities lead the fall, while IT and healthcare buck the trend. Stocks slip on continued concerns over monetary tightening in the US and its impact across asset classes as well as currencies.
Tata Steel says it will merge its listed subsidiaries to simplify the group structure, plug value leakages and exploit synergies. CFO Kaushik Chatterjee tells CNBC-TV18 the move is EPS accretive.
Mahindra Finance slumps after RBI asks it to stop using recovery agents following the tragic Hazaribagh incident, and the company says that it does not expect this order to impact its collections.
The rupee recovers after hitting fresh lows on dollar buying by foreign funds seeking to exit equities after the US Fed indicated peak rates could go to 4.6%. Dealers say the RBI has been offering dollars to counter the buying pressure. Indian bond yields surge further in step with US yields.
Accenture guides for a guidance of 8 to 11% growth in FY23, far lower than the last year's 26%, but analysts see this as still above pre-COVID levels and a positive cue given the recent tempering of expectations from Indian IT. Stocks power up and a depreciating rupee also boosts the sentiment in tech. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor Pavitra Parekh. So, Pavitra, let's take a look at the markets. Of course, my prediction of the color was completely wrong on a Friday. But if you really see the trajectory, of course, the global concerns are really impacting our market. So the whole theory of a little bit of our resilience looks to be shedded now. 17,500, which was being defended last week by Nifty 50, that has really been broken as far as today is concerned. In fact, even 17,400 has been broken. And also keep in mind, last Friday was a slump day. And again, there is weakness that has really set in on a Friday to really close the trade for the week. As far as Bank Nifty is concerned, that is really taking a bigger knock, almost over 2.5% down in trade. The financials have led the nervousness for the market, and that story really continues. Mid-caps are also not too far away, over 1.5% down in trade, and therefore the advance decline ratio almost less than half when it comes to the advancing stocks compared to the declines. So there is a widespread weakness in the market. There is no let up in sight, and some of the big heavyweights and most of the Nifty 50 components are really seeing profit booking at the moment. Some of the pharma and healthcare counters like Divi's Labs, Sun Pharma, Cipla, Dr. Reddy's are the ones which are really going against the trend. So pharma and healthcare is where the safe haven buying probably is setting in, Pavitra.
Oh, absolutely. And pharma and healthcare has actually done well this entire week, right? So for the week, we've seen around a 3% move on the index itself. Another stock which is holding up today is ITC. By the way, that one for the week is up over 5%. So do keep your eye out on that as well. Another space that I'm looking at is the FMCG stocks. They have slipped from the day's high, but still, even with that slip, we are seeing an over 4.5% kind of move on the FMCG index for the week. Of course, IT is in focus after Accenture's earnings and more importantly, Accenture's guidance. So those stocks will come up for you. Keep your eye out on those. And then there's a lot of stock-specific news as well, right, today. So whether it's the Tata Steel and the entire bunch of stocks following that, or the NBFC. So we have a lot to get to in terms of that specific action as well. But let's start off with the top story itself, which is that the board of Tata Steel has approved the merger of 7 Tata Group metal companies with Tata Steel. Listed entities include the likes of Tata Steel Long Products, Tinplate, Tata Metallics, as well as TRF. So Nigel is standing by at the big wall to tell us more about this. Nigel.
Well, the long-awaited big consolidation drive at Tata Steel has finally been announced, with listed entities like Tata Steel Long Products, Tinplate, as well as Tata Metallics to be merged with its parent, that's Tata Steel. Tata Steel has majority stakes in most companies, though in TRF, they have just around 34% stake. Now, the merger ratios that were announced, they come up for you on the screen, and they were more or less in line. barring TRF as well as Tata Steel longs, where the merger ratio was unfavorable, which explains why both those two stocks are under pressure post the big run-up we have seen in the last couple of weeks to around a month. Additionally, Tata Metallics is also, smashed in trade, as the street believes, since bulk of its EBITDA is from the non-commoditized DI pipes business. It could potentially get higher valuations, but that's not the case just going by the merger ratio. The benefits include simplification of the group structure as well as synergy benefits. But getting to the key benefit then, as of now, Tata Steel longs as well as metallics, they procure their iron ore from Tata Steel and they have to pay close to around 22.5% additional royalty on this purchase, which now gets eliminated post this merger. Additionally, Tata Steel longs balance sheet, well, it got stretched post the NINL acquisition, so the merger is a step in the right direction. We spoke to the management earlier today and Mr. Kaushik Chatterjee said that the merger will be EPS accretive and also said that there will be more than 1,500 crores of cost savings or synergy benefits due to this amalgamation, bulk of which will come in on the royalty aspect. On that note, though, let's hear out what they had to tell us earlier today.
After successfully merging and integrating Bhushan Steel, it was logical for us to look at the other subsidiaries which are of strategic relevance. And I think with these companies, all of these companies have, the businesses actually have a great future going forward. So first of all, it will be a simplification. And we have in the last 4-5 years taken out across Tata Steel Group about 120 companies. All of these are obviously EPS accretive for Tata Steel standalone. On the other hand, all of these were anyway consolidated because these are all subsidiaries. So after we the minority shareholders, the minority interest part gets absorbed. But otherwise, they were on its own already being part of the consolidated balance sheet of Tata Steel. So that's less of a point. The more important point is to drive the business in the future. And I think that is what will reflect very clearly on the Tata Steel balance sheet. And when I say Tata Steel, I'm always looking at consolidated balance sheet because that's the most relevant one. Annually, the annual number is close to 700-800 crores.
So I'm assuming that if this was, a benefit of 700-800 crores, and if that's less than 50% of the benefit, then overall the synergy benefits will be in excess of around 1,500 crores.
On an NPV basis.
All right, so that's the big corporate development today and a lot of stocks being impacted there because of that amalgamation. So Tata Steel really making a monolith strong company for various strategic benefits. But remember that this is quite reverse to a cycle of some of the companies really offshooting and monetizing some of their subsidiaries in the stock markets as well for different, equity benefits coming in from each of the verticals. So this is reverse of that, consolidating, becoming a bigger force. Let's shift focus to another stock which is taking a pounding much harder than the weakness in the market is really lending to it, which is Mahindra Finance. Take a look at that. Almost 13% down in trade, and that slumps after the Reserve Bank of India asks it to stop using outsourced recovery agents following the tragic Hazaribagh incident. In fact, our colleague Abhishek Kothari joins us with all the details of this development. And Abhishek, how does it impact the business if it does?
Well, Nisha, as you mentioned, RBI has directed M&M Finance to stop using, or outsourcing agents for recoveries and collections. So they can carry out recovery or repossession of vehicles via their own, set of employees. Total number of employees over there is around 19,750 odd. So M&M Finance has responded to that. They have said that they have stopped using third-party repossessions. They'll further examine whether and how third-party agents will be used in the future, and they gave a clarification with respect to number of vehicles, which is around 3,000 to 4,000 vehicles. Out of 4,000 to 5,000 vehicles will get impacted from this RBI rule. We have reached out to Shriram Transport as well. They responded saying that all their disbursals and recovery mechanism is via their own set of employees, and no vehicle repossessions are done via via third party. We also reached out to Cholamandalam. They responded saying that they have a total of 13,000 in-house employees for collections and recovery, and they have agents as well, which is around 1,500. However, when the agents go out for recovery, they are accompanied by the employees of the company as well. Back to you.
All right, Abhishek, thanks a lot for getting us all of the details there. M&M Finance down around 14%, pulling the rest of the NBFCs down as well, the likes of Shriram and Chola, like Abhishek mentioned. But with that, we're going to get into our first short break on the show. On the other side, we'll talk about the currency markets. Rupee recovers, comes off the lows after breaching the 81 to a dollar mark. So we'll get you more on that when we come back. Hey guys, welcome back. You're still watching Business Lunch, and let's talk about the currency space now. The rupee opened at a record low and breached the 81 to a dollar mark, but it has since then moved off those lows. So it's currently at around 80.94 versus the dollar. So Lata joins us with her analysis on the currency move. Lata.
By midday, the story of the rupee turned a bit. There has been a decent recovery after starting as low as 81.1, going to a low of 81.2. The currency saw a significant amount of recovery, and dealers are attributing it to a huge intervention by the Reserve Bank. People are not putting numbers, probably $1 billion or something, but clearly the tide has turned. What has also helped the currency is the fact that the dollar index appears to have peaked off for now. From almost going to 112, the dollar index has moved towards the 111 mark. But things are very much in a state of flux. Forex market is watching out whether the Fed rate hike is actually triggering a sustained sale of equities by foreign funds. If they do that, they will come into the FX market to buy dollars. And they're also watching out for where the Reserve Bank finds its comfort zone. The big question in the market is 81 the new 80? That is, will RBI defend 81?
All right, Lata, I can only say that rupee is getting used to the octogenarian life. But one sector that really benefits from rupee depreciation is the IT sector. And it's relatively holding out amidst the sell-off, not only after the rupee's depreciation, but also after outsourcing giant Accenture reported an inline fourth quarter with outsourcing and deal bookings remaining strong for the company. Now, Rima Tendulkar is here to tell us more about what this could imply for the Indian IT sector. Rima.
So just a quick word on Accenture's numbers. Now, Q4 numbers came in line with estimates. FY23 guidance does suggest that there is a significant moderation in the top line growth, but the outsourcing business, which is a proxy to Indian IT companies, is very strong. The outlook there as well as the demand booking. So quick numbers first. Q4 revenue growth has come in at 22.4% within the company's guided band. FY23 revenue growth is at 8 to 11%, much lower than the 26% growth that the company clocked in last year. But bear in mind that Accenture is typically conservative when it begins the year. FY22, it started the year guiding for 12 to 15% growth, and we know it finally ended with a 26% top line growth. The positive in the numbers were the order bookings. Order bookings were at the second highest level on record, and in that, it's the outsourcing order bookings which were very strong with a growth of close to about 44%. Attrition, however, remains sticky. The companies also said that outsourcing revenue growth, again, as I said, outsourcing component of Accenture's numbers is the proxy to Indian IT companies, not so much the consulting, and outsourcing revenue growth is going to be double-digit for FY23. Nomura says the guidance does indicate a demand moderation, but it's still about pre-COVID levels, while CLSA says Accenture's FY23, a visible shift in client IT spend to cost optimization, should be reassuring to the revenue growth outlook for Indian IT, while Kotak says the read-through for Indian IT in the context of lower expectations is a positive. Back to you.
All right, Rima, thanks a lot for bringing us all of the details on how Accenture fared as well as our guidance and then what it could mean for Indian IT. With that, we're going to get into another short break in the show. But when we come back, we'll bring you the latest from the Russia-Ukraine conflict after this very short break.
Welcome back. You're watching Business Lunch, and take a look at the markets. If it's any consolation to the weak market, well, Nifty 50 has reconquered that 17,400 level at the moment, and some bit of buying, very little, is being seen at the lowest level in some of the big financials. So Bank Nifty is the one which is seeing some bit of relief, minor bit, which is really aiding the overall markets at this point. So HDFC Twins, as well as ICICI Bank and Bajaj Twins are some of those financials which are adding some bit of support. So little relief, hardly a consolation in an otherwise extremely weak market today. Let's get you the latest really coming in from the Russia-Ukraine war then, and residents of Russian-controlled region in Ukraine will vote today in referendums that could see 4 regions effectively annexed by Russia. In fact, CNBC's Hadley Gamble gets us up to speed with the latest in this war and these developments.
4 Russian-occupied areas of Ukraine, including Donbass and Kherson, are preparing today to hold referendums. That's with the aim of declaring the intention to become a part of Russia. Now, you'll remember a similar situation playing out back in 2014 after the Russian annexation of Crimea. 97% of Crimean residents at that time opted to join Russia back then. Now, NATO has called the polls sham referendum and says that they're illegal and illegitimate with no basis in international law. Now, meanwhile, at the UN Security Council, U.S. Secretary of State Antony Blinken and Russian Foreign Minister Sergei Lavrov traded barbs over the legality of the invasion before Mr. Lavrov left the chamber after completing his address. Listen in.
The very international order that we have gathered here to uphold is being shredded before our eyes. We cannot, we will not allow President Putin to get away with it.
No confidence in the work of this body. For the past 8 months, we were waiting for steps to be taken against impunity in Ukraine, and we don't expect anything more from this institution or a whole range of other international institutions. We've provided a huge number of facts which show how Ukraine prepared to play the role of anti-Russia as a staging ground to create threats against Russian security, and I can assure you that we will never accept this.
All right, that is the latest on the Russia-Ukraine conflict. But staying with this and the impact of the war on Europe's energy availability, Germany is reportedly in talks to provide financial assistance to regional energy firms. Spain is increasing its capacity to send gas to its neighbors, while France has also announced a new renewable energy plan. CNBC's Steve Sedgwick joins us with the latest from Europe's energy space. Steve.
The German government is reportedly in early stage talks to provide urgent financial assistance to regional energy providers. This, according to Reuters. Now, Berlin spent 29 billion euros in a deal with Fortum to nationalise Uniper just days ago. Spain, meanwhile, is increasing its capacity to send gas to its neighbours by 18% from November. An additional 1.5 billion cubic metres of gas per year could be sent to France and Italy if needed, according to the Spanish Energy and Environment Minister. This equates to around 6% of all French natural gas consumption. Now, good news out of France. The French President, Emmanuel Macron, has unveiled a plan to boost renewable energy production aimed at increasing France's energy independence in the wake of Russian invasion of Ukraine.
Times have changed. They had changed as soon as we came out of COVID, with a rise in prices, because there was tension in world markets. And obviously the war turned everything on its head. Not so much the French model, if we're honest, but it shook up the European model, because many countries were dependent on Russian gas for production. And clearly, for the first time, energy became a weapon of war.
All right, so away from the Ukraine-Russia crisis, well, let's talk about sports, but this time about sports-related business updates coming in. Well, last season was not a very good one for Manchester United and its fans, and the club's financial results for last season also followed the same theme this time. Now, the club reported a loss of over $115 million despite higher revenues as the wage bill and the debt for this particular company surged, and this, however, was an improvement over the previous season year. In fact, CNBC's Sylvia Amaro filed this report.
When it comes to the actual results for Manchester United, I just want to show you the overall message from the company. They reported yesterday evening. You can see some of the numbers behind me. All in all, though, I want to highlight that when it comes to broadcasting revenue, there has been a decrease here of about 15% year on year. This is because the company said it played 22 fewer games compared to the previous fiscal year and team year as well. And here the big jump comes with match day revenue. You can see that it jumped by more than 800%. And this is actually a COVID story, because in the previous fiscal year, there were very few games that the fans could actually watch. But now that COVID restrictions have eased, you can see more people going to Old Trafford and indeed they're watching the games, and therefore that has proved an important boost in terms of revenues for the company. But finally, when you look at the actual numbers at the end result, you can see that there was still a net loss here for Manchester United. This quarter came in at 70 billion sterling. That is indeed an improvement from the previous year, but nonetheless it is still in the red.
All right, Sylvia, thanks a lot for getting us that wrap on Manchester United's earnings. With that, we're out of time on the show. The market has slipped even further. It is at the low point of the day, a 240-point cut on the index. But the Nifty Bank is where the real pressure is. In fact, if you take a look at the kind of move that we've seen since the record high levels last week, it's been an over 5.5% fall. That's the kind of pressure we're seeing on the Nifty Bank. But with that, we're out of time. Thanks a lot for tuning into Business Lunch. Mid-Cap Radar comes up next, and they're going to take all of this action forward.